All right, welcome back to Trading Weight. Just wanted to continue where we left off at on a previous video, which is literally uploading as we speak. And these are only 4-hour levels, and I changed the color. This used to be green, but my sell side it has to be red. Buy side is blue, but whatever. This is the equilibrium of the range. So this is the range high, range low, based on where price opened up for the week here, right here, this area. And so let's go based off of this. You treat the 4-hour or 60-minute as your daily chart and study 5-minute structure. A whole new world opens to you. Test it and see it, as well as 15-minute charts removes the blur. All right, so anyway, 5-minute chart. Let's go to Monday. All right, so think in terms of narrative, where is price coming from? This delineates a new week. This peach, whatever area here, new week. So this is Monday. One thing that I started to do is this. And one thing that I benefit of that is that I get to see let me put this in the right place. Anyway, so this is what I have going on. Nope, this is what I have going on. And this 1800 to 0200 hours, obviously that's like 8 hours. 6 p.m. to 2 a.m. This covers 2 candles, 2 4-hour candles. So this is an 8-hour time span. Everything else is 4 hours. And that is one method that I utilize on a 5-minute chart to kind of go, go back over here, and hopefully it becomes significant. And I utilize it's different ways. It's another indicator here. This one, 4-hour, 1 hour, high and low. Utilize that as well, right? But I like my repurpose one because it also tells me what the range is. That's what I was working on till I lost. Where is the table talk? What you get for not reading? You just trying to like breeze through stuff. The bottom center, and let's make it a little bit bigger. All right, so this kind of tells me average 5 days. So this previous week, this is what we got, or previous day rather, Friday. This is the range for each 4-hour, and then again, this is an 8-hour time span. For each day, for Friday, and over the past 5 days, this is what each one of these ranges would get you in terms of points. So, and obviously on the 4-hour chart, you can tell that it was in a range bound week. I'm gonna take that back off, and let's see how we can utilize this ideal, because it's the same. It's the same as, and when you go this right here, you go almost the same as when you are utilizing kill zones, right? These are kill zones. This is nice still. And you say, hey, this is the Asia range, London. It's an AM session from 7 to 11, I believe. And then you have the lunch hour. Then you have the PM session. And here you have, so you see here that oh, this is the Asia low, the Asia range, London range, previous day PM session. Price didn't take these lows out. This ran the high. Didn't take the low out, came up here, ran the high. So you can kind of see what the liquidity is based on kill zones. That's cool. That's cool. I ain't got nothing against that. I like to leave my Asia range, like the pivot. That's what this blue line is. I like to leave because this is significant to me throughout the day, because you can see, right, Asia range still, it would be here. I can't see where the low is. Anyway, you get it, right? Here's the high, the low's down here. So in this case, it didn't take out the low yet, but I think it took it out later on, right? Right here. Right. So significance of the Asia range. Oh, this actually looked like it uses like some type of support here. Anyway, and then it took it out here, right? So way back there, Asia range. So Asia ranges are significant to me throughout the trading session. And back to this idea here. Right. So this is the Monday. You literally trade 4-hour candles, right? So it's the same idea. So this is accumulation. What would this be? All of this is accumulation. Accumulation. This is the range. This is the new week opening price, this orange line. And this is that 4-hour daily volume imbalance, right? So run on stops. This would be your breaking structure here. And you have a retracement into an imbalance. Where's the imbalance? Turn that off for a quick second. Right here. And because you have that run on stops, then you can target. This is this candle. It's inside, pulls back into the upper quadrant of anyway, goes back into the upper quadrant of previous candle, right? Above, this is 50%. 50%. Go back here. And then we start to target. And this would be your, look like 10 to 2. This is your 10 a.m. to 2 p.m. 4-hour candle. And see it broke out the consolidation, retrace into this fair value gap. Take this off again. And what will we be targeting? Right? This high, this high, this high, which is also the Asia high here. And it retrace again. And it broke above this 4-hour. You see how it was significant here because it was held price and then it stabbed into that volume imbalance, and that's when it dropped. Then you have a run on stops. Then you have a retracement into this imbalance here. Right? All right, so let's get back into the theory. 4-hour trading 4-hour candles. and using that as targeting, right? So this is 8 hours, right? And this is that. Ran this block high, right? So you have the run on stops here below, let's say 2200 to 0200. So 10 p.m. to 2 a.m. ran the low. Then we want to wait for a break in market structure. Low key, we have this small break here. Your stop would have been down here. Could have utilized this bullish fair value gap here. And you probably wouldn't have been stopped out, but it looked like it just hit that mark here. And then it took off, right? But this is your turtle soup entry. This is your break in market structure. Here's your second entry, your third entry. And here's a fourth entry here. Right, and that's looking to get above this 4-hour candle. And then it stabbed above that 4-hour candle, and then it targeted these relative equal lows here on the next 8-hour block. Then, all right, so that's the long here during the 10 o'clock range, 10 o'clock to 2. Let's make that, like, how good color can we make that to make it more like, it's an ugly color though. Let's do this. Let's flip it. Turn that green and then turn this to some other color. All right. All right. So that's utilizing this. So you have accumulation, manipulation, then you got your distribution. Obviously, you got multiple stages of distribution, but whatever, right? Then you have the climax. So you got accumulation here. You got distribution. You got manipulation here. Then you got distribution. So again, see where we at. Trading candles, right? So let's go back to this 10 o'clock candle. What happened here? This is your Asia session. Asia session low was ran. 6 to 10, we have a run on stops into this 4-hour bullish fair value gap. And you do have a lot of opportunities here. All right, so that ran the low, and then where we going? Took out this high, consolidated above it here, retrace into this small fair value gap. And targeted this swing high and took out the Asia high here, then collapse. You have a balanced price range here with a PM session, which warrants the short targeting this candle, this 4-hour candle swing low. Let's see, that would be like that. Then you got all this noise again. This is all tradable too, right? Because technically, if you got in here, that would be your smart money reversal. This would be a low risk sell, and that would be targeting that low. All right, so let's get back into this 10 o'clock to 2 o'clock. And we have here, we have the London session. Price 6 to 10, ran stops. Broke below the accumulation. and the retracement into the accumulation, which is also the bearish fair value gap. For the short, targeting previous 4-hour candle low here. Then you got another retracement back into this imbalance, and then targeting all of these relative equal lows, and did I just put this here? Took out those lows, and then oh, so this is news FOMC. So, and again, it held this quarterly level on this 4-hour fair value gap. And again, so took out the low. So this would be this is the outside bar. It totally engulfed this 4-hour candle. Took out the low, took out the high, and then so it took out the low. Here would be your breaking market structure, your market structure shift here, retracement down into this inverted fair value gap. Ooh, that's rich, right? Let's see, let's turn that back off just so you can see. That's ugly. Just leave it red for now, but I try to make it gray normally. Inverted fair value gap, long. And let's get back into the 4-hour. Long, pull back into this bullish fair value gap, and they push higher, because then you have another pushed off of that, and then this gap, this new day opening gap, or this fair value gap. So yeah, all of that's tradable. And where am I now? Right, that's here. I think that's the way I drew it, is because it's on the 15-minute chart. And here's the same ideal again. Ran the high, ran the low here, retrace into this range, right? From discount, from premium to discount, and long entry. Optimal trade entry long. Right, here's your entry. Here's your target, -27. And it ran these 4-hour candle highs. Ran this previous week's high. And this was your mitigation block, but it ran all that, right? So then what? Probably going to target, took out the high, so it's probably going to target lows, right? Discount, premium. So it didn't make it all the way down there, but took out the high. Is your turtle soup. Is your breaking this level would be your market structure shift. Here's your retracement here. And mitigation block, or this tiny little fair value gap. Tiny little fair value gap. And you can always drop lower than this to see some other setups, but that's what I see. All right, so this is, even if it doesn't take out the low, it's still going from a premium into a discount. And the draw on liquidity does not mean that price has to reach that draw on liquidity. It's just a directional bias, essentially. All right, so boom, this has like good range here. Got the long entry, got the short entry, low risk sell into discount. This is also a breaker, right? High, a low, high, lower low. And these up close candles is the breaker. And then again, let's see here. We have price running the London session, running the Asia high, this blue line, taking out this swing low. 6 o'clock, some like whippy action, took out the previous candles, so another outside bar, took out the high first, took out the low, and then you have a retracement into that same 4-hour volume imbalance. And drop, dragon structure, have a retracement here, another market structure shift and a retracement, and you have a small fair value gap here, and you have a violated bullish fair value gap, which is inverted fair value gap for the short. You could utilize here for a cleaner entry, or here for an acceptable entry, because the stop loss would have been here. And targeting. So this is your 10 o'clock candle, targeting previous candles low, and then this 8-hour, the Asia session low. So yeah, 4-hour candles. This is a different way of utilizing this. I like it. I wish it was like I like it as it is, because there's no point for me to make this, to divide these two candles. This range is good enough for me. Even though, right. Anyway, that's all I got for you. How long have I been talking? 22 minutes. Anyway, if you enjoyed yourself, if you have any ideas on how it could improve or any questions, please drop them in the chat. Please like, comment, and subscribe. Deuces.